Going on, team? It's me, LG, your favorite internet marketer. And what I'm going to do here is going to explain this wonderful strategy that I've came up with you guys to help you make a whole bunch of money. All right. Now I'm going to explain in detail. I'm going to explain exactly what all these columns mean. I'm going to explain the rules of the strategy and how to use it along with swipe trades. But there are going to be a couple of Forex terms in here. If anything I explain doesn't make sense, then you're not ready to start trading. It's going to be some very, very basic Forex explanations. But if any of these explanations don't make sense, you need to go back through the previous training so you can get to a point where you understand what I'm saying. For example, if you don't know what a lot size is, you're not ready. If you do not know how to convert a regular money into a lot size, you're not ready. For example, right here, this is $1.60, but the way you would put $1.60 in is 0.16. So if you cannot look at dollar amounts and convert them to lot sizes, you are not ready to be trading and you should not be using this formula. Okay, let's dive right in. So here's what my formula is based on. My formula is based on 80% of your account, it's 4/5, 80% of your account at a 5-pip take profit based on 2 swipe trades per day. Can you take more than 2 trades per day? Absolutely. You can take as many as you want per day, but you have to take one at a time, and each one will only be at 5 pips, and the chart is based off 2. So in this column right here, you have your account size, $100. If you start off with your account size at $100, and right here it says that $1.60 is 80% of $100. That means your lot size will be 0.16, and the goal for the day is 10 pips. However, this is based on 2 swipe trades. That means your first swipe trade, you're going to put it in at 5 pips. Okay? So when a swipe trade comes out, you're going to put it in at a 5-pip take profit, and you're not going to put another swipe trade in until that one closes. Once that swipe trade opens, runs its course, and closes, now you're available for the next swipe trade when it comes out. Then you will put that one in. Once that swipe trade opens and closes, you will have gotten your 10 pips for the day. So let's say a third swipe trade comes out. When you go to take that third swipe trade, you would actually move down because at that point your account balance should be $116. So you will move to the next column, which is $1.90, and this is how you put 0.19 in. This is how you put a dollar in, and you're going to do the exact same process. You're only going to do a take profit of 5 pips, and you're only looking for 2 in a day before you move on to the next column. Now, understand you do not have to focus on the days here. The days are not what's important when trying to figure out what column you should be in. The account size is what's important. So if the swipe trades are really flowing that day and trades are coming out back to back, you're putting them in one at a time. They're opening and closing. What you should be checking to make sure you know which column you're on is your overall account balance. So before you put in a trade, you need to look at your account balance, see where you are. So that will tell you what lot size to use. And you're always going for 5 pips at a time, a 5-pip take profit. And you're always only putting one trade in at a time. All right. If you follow that process, your account will go from $100 all the way down to $157,000. Okay. So now I'm going to take you over to what swipe trades look like so we can talk about how to put them in the swipe trades correctly. So when you get a swipe trade, it's going to come to your app, but it's also going to come to your email. So I just want to give you this example right here because this is going to show you how to create your own take profit, all right? A take profit of 5 pips. So when the swipe trade comes out, you're going to take their entry point and you're going to take their stop loss and you're going to paste it in your MetaTrader 4 exactly the way they have it. What you're going to ignore is their take profit. Okay, so the swipe trade comes out, you would take their entry price, you would take their stop loss, you would paste it in your MetaTrader 4. But when it's time for the take profit, you would ignore their take profit. What you're going to do to create your own take profit, the take profit of 5 pips, is that you're going to look at the entry price. Okay, you are either going to be adding 60 or subtracting 60 to the entry price, and that new number is your take profit. The way you decide if you're adding 60 or subtracting 60 is if the trade is a buy or a sell. So in this example, it's a buy. So what you would do, and if you want to pull out the calculator, that's fine. You can put in 1, 2, 3, 400 plus 60. This new number is your take profit. So your take profit will be 0.23460. And that's the number you will put in your take profit, okay? And that's how you do most pairs. There are 5 numbers after the decimal point, and you will simply be adding 60. Now, some pairs, like a JPY pair, only has 3 numbers after the decimal point. You are still doing the exact same thing. You are adding or subtracting 60. So this is a cell. So here's how you would do this one. 131000 plus 60. All right. So your take profit will be 131.0. Oh, I'm sorry, guys. Subtract 60. So 131,000 subtract 60. We're subtracting because it's a cell. So your take profit will be 130.940. So when you got this swipe trade, you would have put in their entry price, you would have put in their stop loss, but you ignore their take profit, and you're going to put in the take profit that comes from either adding 60 or subtracting 60. Okay. Now let's cover market executions. When you see sell by market or buy by market, that's a market execution. Now, you should not be taking market execution trades if you don't know how to read charts. Excuse me. If you don't know how to read charts, okay? Market execution means you're not choosing a entry point. You're jumping right in at exactly the place where the market is. And that can be dangerous if you don't know how to read charts. So here is my suggestion. When a market execution comes out, you still put it in as a pending order. So this is a sell by market. So what you would do, um, there's 2 types of sells and there's 2 types of buys. There's a sell limit and a sell stop. There's a buy limit and a buy stop. The system will only let you put in the correct one. For example, if a trade is a sell limit, it will let you put in a sell limit. If it's a sell stop and you're trying to put in a sell limit, it won't let you do that. It'll be grayed out. So when you're trying to make the choice between sell limit and sell stop, it's okay if you're new and you don't know which one, because the system is only going to let you put in one. So for example, if this sell by market came out, what I would do is I would take this entry price of 0.094050, and I would go press sell limit and try to put it in. If the button to place is available, then I know that a sell limit is correct. If not, I will put in sell stop. Okay. I would still use the same entry point and the same stop loss, and then we're going to do the exact same thing. It is a sell, so we're going to subtract 60, okay, for your take profit. So your number right here for your take profit, your number would be 94050 subtract 60. That new number, 0.93990, that would be your take profit, okay? Same thing if it was a buy. There's a buy limit and a buy stop, all right? That is how you count pips and put in the correct take profit. So recapping really quickly, when a trade comes out, you're going to use the entry point that the trade gives you, that the swipe trade gives you. You're going to use the stop loss that the swipe trade gives you, but you are not going to use their take profits. You're going to go to the entry price, you're going to add or subtract 60, and that number will be your take profit, all right? Guys, this strategy works very, very well, but you have to follow the rules. Let's talk about some of the rules. Like I said, it works very, very well, but you have to follow the rules. Here are the rules. Do not get greedy. Do not get greedy. Do not get greedy. I've seen people be successful with this strategy, but where they go wrong is when they get greedy. What do I mean by getting greedy? First, stick to the exact lot size that you're supposed to be at for your account. Okay. Secondly, only go for 5 pips, only go for 5 pips, only go for 5 pips. What I've seen people do is they'll go for 5 pips, they'll win the 5 pip trade. When the update comes out and it tells you that trade won 30 pips or 50 pips or 100 pips, they'll say to themselves, on the next trade, I'm going for 10 or 20 or 30 or 50. And what happens is that's going to be the trade that you lose that hits the stop loss, and then you're going to lose 80% of your account. Okay? So slow and steady wins the race. If you simply take one trade at a time, 5 pips at a time, 2 trades a day, you will take $100 to over 100K in a 90-day period, okay? The way you can move faster on this strategy is by adding more money. So for example, let's say you start at the $100 mark, you see that it's working, you're progressing, and then you get to 200 bucks and you say, you know what? I really want to go faster. Well, you can add any dollar amount that you want and then just find your spot on the chart. Let's say you're at 200, and then you add 1,000. All right, so now you're at a total of 1,200. Well, you could skip ahead. Maybe on day 5 you were at 200, then you added 1,000. Well, now you're on day 17 and you're still right at the beginning. So if you want to move faster, there is one way to move faster, and that is to add more money. Other than that, slow and steady wins the race. Take it 5 pips at a time, 2 trades per day minimum. Okay. And when I say that, I don't mean when a third trade comes out, you can't take it. I don't mean when a fourth trade comes out, you can't take it. You can take as many trades as you want that are available as long as you take them one at a time, meaning you put a trade in, that trade opens up, it hits your take profit, it closes. Now you're open for another trade. You do not want 4 and 5 and 6 pending orders. You only want one pending order at a time, one trade at a time. All right. That's everything. If you stick inside of these guidelines, you'll be successful. Other than that, it's me, LG, your favorite internet marketer, signing off.